silver dollars played a role in international trading, and it kept that way for about 400 years. So, I want to contrast that last sentence of being on a silver standard for 400 years and the fact that I just showed you couldn't be on a silver standard for one day in modern times. So think about that.
So you guys already saw, we all know who's speaking next. You've already seen me get choked up talking about him because I really do look up to this man, and he is extremely kind. I've learned so much from him over the years. Industry leaders have learned from him. The guy has had some just groundbreaking work. But what's really interesting to me is listening to David Morgan talk about when he first started, because he acts today like he did back then. As professional and intelligent as he is, he'll be the first one to make fun of himself. And when he asked me to do this, he said, I can make fun of him. And I'm like, there's no way I could do that. And then I was introduced to Rob and his team, and someone was, I've known David Morgan ever since he started. And I said, well, tell me about him. She goes, well, first time I met him, he went to one of these silver shows wearing silver suit, like silver tails, silver hat. And he told her, I want to be known as the father of silver. And I'm like, you mean the father of time, right? And she starts laughing, and I go, no, I can actually say that. Oh, that didn't go over very well in here, David. I thought I was going to kill it on that one. Because he has an amazing sense of humor. And, let's call a spade a spade. I mean, how exciting is silver right now, right? I mean, come on. It goes up a few bucks. Everyone's super excited. They dive right in. It goes down a couple bucks, and everyone's like, I'm done. But David understands those cycles. And it's great that we have differences of opinions, like from all the speakers here, right? Because it's super important to get the big picture. And I think that's why we need both sides of the story. So without further ado, I want to introduce you to David Morgan.
All right, Silver Symposium 2021. Everybody hear me okay? All right. So how do things look? And so this is not anything to do with the silver market or the gold market or the financial markets. This has to do with the world right now. My sister sent me this, and it touched me so deeply that I decided I would take the 3 or 4 minutes and go ahead and play it. So hopefully the sound works.
People think we're more divided as a country now than we've been in a long time. I know it can seem that way, but when I was a little kid in 1969, the Vietnam War was tearing the country apart. And they'd shot John F. Kennedy, and they'd shot Bobby Kennedy. They'd shot Martin Luther King and Malcolm X. And there was the Manson family and the Zodiac killer, and it just felt like the whole country had lost its mind. My father, who'd grown up in the Depression, well, his faith in humanity was just at a low ebb. And the two of us that June were driving from LA to Oakland in an old 1960 Oldsmobile, and the water pump blew out south of Bakersfield. And so this was long before cell phones, so we were gonna have to hoof it like 9 or 10 miles into town when this young cowboy pulls up in a flatbed and offers to tow us in. And all my dad had on him for money was this old Chevron gas card, so he kept telling this young fella, I can't pay you. And the young cowboy's looking at him like, yeah, I wasn't gonna charge you. So he rolls us into town, and this is a Sunday, so nothing's open. So he has to go get his mechanic friend to open up his garage, and my dad says, hey, listen, I don't have any money. And the mechanic says, we'll work something out. And then they all realize they don't have the actual parts, so now they got to go roust out the local auto parts store owner, and they bring him down. And my father's like, okay, we need to talk about how this is all going to get settled, because he just couldn't imagine anybody being this trusting about the money. So the cowboy says, look, if it'd make you feel better, I got a bunch of watermelons I need to get loaded onto my flatbed, and it's pretty hot work, and if you help me out, I'll pay for the part. So next thing you know, we're all unloading watermelons from inside a rail car. That's about 140 degrees. And 90 minutes later, we are soaked in sweat. And up rolls the car, just running like a top. And my dad says, I really don't know how to thank you, fellas, and for this good turn. And we're turning to go, and the mechanic gets this look on his face and says, whoa, where do you think you're going? And you could see on my father's face just all the fear and distrust come to the surface. And he stiffened like a leopard. And the mechanic says, no. my wife's going to make us all Sunday dinner, and you and the boy can get a shower and a clean shirt, and it'll make the drive easier for all of us. So we sat down for a dinner of fried chicken from the chicken right over there, and corn on the cob from the corn right over there. Man, I got to tell you, we'll never have a meal that good ever again. And my dad didn't say maybe 3 words the whole drive, but when we got home, I got into bed, and I was just about to turn off the light, and he stops in the doorway and he says to me, no matter what you see in the movies or on TV or you read in the papers, you listen to me. That's how people really are. And about a month later, Neil Armstrong walked on the moon. So, keep the faith.
I hope you like that. It's just a reminder that we've seen, ups and downs through humanity, human experience, and that one really touched me. So I just kind of wanted to start with that and keep the faith, and not so much about silver price, but what we're all going through in the geopolitical sense. So I will move into the silver market. So, there's this, I guess you could say, controversy about silver. Is it money? Isn't it money? When was it money? Is it good money? So I thought I'd take a contrarian approach to my own thoughts on silver as a monetary asset, or at least a store of value. It's, I'd say gold actually has a superior place, and I fully admit that. But I just want to do a quick run. This one was in my head, and I hadn't done the arithmetic, so I thought, okay, this is kind of interesting. So from 2019, according to Google, there are 157 million workers in the United States. And when I typed in average workday, I was surprised because I thought it'd be under 8 hours. It's actually, according to the information I got, 8.8 hours. And the other one that surprised me was the average earnings, and the average earnings are 27.16 per hour. So I'm going to equate that to 1 ounce of silver at today's prices. So I'm going to take 150 and I'm going to take 8 hours. I'm going to multiply those together. I'm going to come out with 1.2 billion work hours in one day. So bear that in mind. Now what does that mean? It means I did a math problem. But it really says, as a conclusion, why silver is not money is because all the silver mined and recycled is roughly $1 billion in a year. And that amount would not pay for even 1 day's wages at current prices. Dollar, paper value of silver. You take 1.2 billion ounces, and there's only 1 billion available, and that counts recycling. Mining alone wouldn't do it either, obviously. So, being the silver guy, and of course Jeff is silver and gold and moly and everything else, but and I do a lot of the other resources. That's why I changed the brand of the Morgan Report. We were the first of rare earth elements and everything else. I digress, but we look at more than silver, but it is my passion. So we hear everything about the gold standard, this gasoline is from the gold standard. Everything's the gold standard, and I get it. But I thought I'd take a little step back and do a very cursory look at the silver standard, because we hardly ever hear about it anymore. So I'd have to read some of this, but everyone knows a silver standard would be a monetary unit that's a weight of silver, okay? And silver was more widespread than gold. Its natural ratio was about 12 to 1 in the 12th century. You go back about 100 years, maybe a little less, 80. It dropped about 10 to 1. And right now it's arguably 8 to 9 to 1. So the grade of silver is declining over time, but I'm going all the way back to the 12th century to make that statement. So the first commodity that was used as a function of money was used by the Sumerians as early as 3100 BC. And not to digress too far, but I think probably half the room knows about the Anunnaki, and they started the first ones to write things on tablets and brought math and agriculture and all that. They were basically the founders of what you could consider modern civilization. So sometime before 2500 BC, the shekel became the standard currency. And as I said, the Sumerians started with the clay tablets, and they recorded the price of basically everything in terms of silver or shekels. Spanish dollar, which is what most, silver historians will talk about, which is true, of course, was created as a global silver standard from the 16th to the 19th century. And then there's a book called The Pieces of Eight, written by a scholar that's one of the best constitutional students or scholars around. Anyway, silver dollars played a role in international trading, and it kept that way for about 400 years. So, I want to contrast that last sentence of being on a silver standard for 400 years and the fact that I just showed you couldn't be on a silver standard for one day in modern times. So think about that. So I've proven over and over again, the lecture that I was giving 2 years ago was, what if silver were treated like gold? And the whole point of that lecture was, if silver was treated as money and not as an industrial commodity, it would be a different price. When both silver and gold were only money, because there wasn't any use for silver in a technology society, it traded at a ratio of 20 to 1 or less for like 4,500 years. And it's only been in the modern era, meaning like 1900 round numbers until now, so 120 years, 150 years, go back to 1873, where since silver's been demonetized, that it's had a ratio that's gone as high as 125 to 1. So if you want a high-priced silver, it's money. It's that simple. So you say it's not, which the market's saying really it's not. So it's something to think about, though, because that kind of startled me when I thought, well, it couldn't even work for one day. And I don't have the book anymore, and I'm sorry I digress, but it kind of upset me because I have almost every book that mentions silver in a strong way. I think I'd probably burn the book, but this guy said, silver's so plentiful, so much of it, and we could go back on this, he didn't say silver standard, but we could use it in our daily change. I thought, I don't think so. Anyway, moving on. So basically we went from silver to gold. I think some of you heard other lectures I've given about the Yellow Brick Road and Wizard of Oz. But basically Great Britain was the first one. They overpaid, so they basically attracted a lot of gold. And they weren't the only ones. Germany basically followed. The rest of Europe followed them and basically went to a pseudo-gold standard. And China was the last to be on the silver standard. By 1935, China and the rest of the world were using basically currencies. Some not directly pegged to gold, some others were, and some were still pegged to silver. The pound sterling at the time was pegged to silver. So now I'm going to go through a very top-level look at the silver market. Most of these, Jeff, I took from the Silver Institute. Their numbers are pretty close to yours. But global supply, you can see what happened over the last 10 years or so. And, this chart speaks for itself. Like I said, this is kind of a top view. It's not going to be real deep. The long-term outlook continues to go up and up and up. And, of course, all markets are determined by the margin. So if there's enough for industry, you could say it's the jewelry or silverware market, but really not. That's really, I classify pretty much as industrial use in a way. It's the investment demand that moves the market. Now, in the case of palladium, I would say that market has almost no investment demand, and almost all of it is commercial demand or industrial demand. And palladium took a nice moonshot and leveled off because all markets seek equilibrium. And that market seeks equilibrium around the $2,500 per ounce level. And that's because it's required for catalytic converters at a certain rate. And there's just a certain amount that is fed into the market. I know it's dropped off about 2,000 lately, but that's a pretty good example, to my thinking anyway, of a physical market really maintaining what the price is. You don't see much. There are futures markets. I don't even know why, in my opinion, Jeff may have a different idea, why they even have a futures market for platinum, palladium. They're such tiny markets, but they do. So Jeff showed us his chart, which is almost identical to this one because it's pretty obvious what the ETP holdings are, exchange traded products. Shot up dramatically in 2021. If you didn't hear his lecture, a lot of that moved from these trading desks that are shutting down and they're converting bullion into shares. So, if If you own the SLV and you say, I want possession, you're going to get a share certificate. That's what you're going to get. There's very few that can actually take the silver off of the SLV. Whoops. I'm not going to read these to you, top 20 producing companies. I'm doing this from memory, but you got to go far down that list before you find anything in the United States. Mexico, China, Mexico are really big producers of silver. Global mine production's been falling off. I am not in the camp of peak silver. I really think, knowing what I know about the mining industry, I think there's some pretty large deposits out there that are not in production yet that could bring that up. I agree with Jeff, I think, on the 2021 level, probably will get back up to 2019 levels. Time will tell. Recycling, this is pretty flat, it's come up some. Some of the recyclers will hold on to it based on price and not put it through the recycling center, speculating on it somewhat. This could change. And industrial demand, if you look at this chart, and it's fairly accurate, it's been actually fairly level for a while. And a lot of the up and coming ideas with more photovoltaics, solar panels, not necessarily EVs, but more silver in the standard internal combustion engines, et cetera, is putting more and more demand. I met a gentleman named Matt Watson through the Silver Institute, and he does independent research. And it was fascinating to go through his work. He thinks, and has a pretty good argument, that the industrial side of silver between 2020 and 2030 will go from roughly 50% of the market to 80% of the market. So that brings me back to kind of the palladium story. It's not 100% of the market like palladium, but it's a substantial increase from where we are now, which means the margin left to buy, unless there's a lot of new mining activity, a lot more production, could put further pressure to the upside. However, you know, we try to look out ahead and not miss anything, and believe me, I missed a few things, but this is sent to me from one of my members, so thank you for that. I think it's Warren was his name, so thank you, Warren. Now, is this true or is this false? That's why I have a question mark on here, but he did send me this article. You can look it up. Australian technology startup creates world's most efficient solar cell while replacing silver with copper. Now, if that is true, then it would impact silver, but it wouldn't impact silver's use in photovoltaics. But that doesn't kill the silver market, but it could impact it. Something like that, if and only if it's totally true, and I don't know, could have an effect, and my best guess from my experience, probably a couple years out, so it's not something to panic about. In a way, I would have to say, you know, as a human, it'd be a good thing in a way. I mean, there's, 100 times more copper than silver. It's a lot cheaper, and if it's just as efficient, then you might be able to power a lot more of the planet with solar. I've seen this before, not this particular exact case, but David Smith and I were down at the Brian Lundine's event in New Orleans a few years back, and there was a company there that was using aluminum for powering solar, and we investigated that pretty strongly and never really went anywhere. I'm not saying this won't, just bringing you a heads up, but this is the kind of stuff you want to be aware of. Another one that I actually asked Bernard Cattus about when he was writing for Casey Research, because he was writing their energy letter, about thorium, because I'm kind of a fan of it. I haven't dove real deep into it, but this is for all the uranium people out there, and David Smith asked Lobo Tigre about what his thoughts were on uranium. I tend to agree with what he said. I think it's got about a 2-year run. I think it's probably worth being in for a while. The thorium reactor, this press release from China having a thorium reactor, they're safer, there's more thorium, there's, as Lobo said, there's a fair amount of uranium, even though you might not know that. Something again to keep in mind. So you want to stay ahead of the curve. You know, you don't want to just get locked into a linear type way of thinking that, you know, here's this, you know, this is the silver usage and it's going to go like that forever. You got to be very cognizant that things can change very quickly and very dramatically. It doesn't happen often, but you want to be open-minded and, you know, be able to, you know, look for those type of things. And this one is, since we have been writing in the crypto space for a long time, and I'm somewhat neutral to slightly positive on the whole sector. I'm really not that much of an expert at all. I wouldn't even use the word expert in my name, but David Smith has done a pretty deep dive. We have been writing about that space for about 3 years. And we've heard China is, you know, banning Bitcoin, and then it's back on, and then it's off. And I get the argument, you can't close down Bitcoin. It's a blockchain. It's computer-driven. A country can do whatever they want, use a VPN, keep going. I get all that. But my argument is, be careful. And whenever the market's at a high or near a high, if you're overbalanced or over-invested, you might consider taking some profits. And for full disclosure, I am involved with a silver and gold-backed tokenized cryptocurrency. And I think we're going to hear about it on a panel that's coming up either today or tomorrow. I'm not sure where it is in the schedule. I only brought that slide. I know you can't read that, just the new and emerging uses, which I just showed. And Jeff Clark gave you, I know he does because I've spoken on the same venues he has. So I thought I'd give you a stock pick. How many here are actually subscribers to the premium service? So you guys don't, no rocks, okay? So to own what I said that this is one of the best speculations I've seen in 40 years, and I've been buying, you know, in the stock market since I was 16 years old. Probably gonna, I might have to eat those words, but there is a company, was called EnviroLeach. They just changed their name to EnviroMetals. The symbol is ETI, but it's not on the Vancouver Exchange. It's on the Canadian Stock Exchange, but you can Google it. There's about 4 or 5 videos you can watch. I am invested in it. But we take basically printed circuit boards, grind them up, and precipitate out the precious metals. And as a picture does exaggerate, but it's pretty good at giving the general idea. On a good gold mine, 1 ton will give you that much gold. And when you precipitate out the high-end printed circuit boards, you get a lot more gold out. The thing that's unique is it's green, green, green. The reason it's green is it's inert. You can actually drink this stuff, not that you'd want to, but it does precipitate out metals. And the problem I've had is I love being first. I'm like, oh, I made that discovery. But usually in my industry, if someone finds something that's unique, it works, then they go and do their own due diligence. And, you know, Jay Taylor, another friend of mine, newsletter writer, will write about it. Or, you know, Casey will give me a call of one of his people and say, sounds like a bunch of crap, but who do I talk to? And, you know, so you get some momentum. But no one seems to care about this. And yet, this is a big part of the industry. When I was in China, Beijing, and went up the CITIC Towers and about 3 floors under the Rockefellers, the only thing they wanted to know was how to recycle as much silver as possible. The Chinese are frugal. They have to be. There's, you know, so many billions of them to feed and everything else. So there it is. It's ETI. You can look it up, do it or don't. What I teach is bet a little to win a lot. On these speculative investments, you don't want to bet the farm until it proves itself. I'm one of the few in the industry that once the story's coming true, and we know it's coming true, you can actually buy it at a higher price because you have more assurance that it's going to actually happen. So far, it's been a story, a good one, but a bit of a sad one. And when I got involved, it was a spin-off from a company called MineWorks, and we got these shares for free. And it looked really good, and then Roth Capital came in and put in a fair amount of millions into the company at $1.50. So at that time, and knowing, you know, the stock market fairly well, I thought I was safe to go ahead and recommend it up to that point. And the warrants would be exercised about a year later, and I think it was $2 a share, and I was pretty confident everything looked good. The story got better, and it didn't. stock fell off. It's been, I think, under, David, is right, it's been under the initial offering price now, hasn't it? Yeah, so he's confirming, I think it was 25 cents, and it's recently hit 20 cents. So you're buying it as if you were an insider on the ground floor. I'm not saying to buy it, I'm not saying to not buy it. It's a unique story. I believe in it. I'm on a board of a private company called Group 11. We're using this substance, this inert fluid, and in situ mining, which basically is what they do in a lot of uraniums. You basically drill down. It's like fracking. You drill down and you put the fluid through and you get the metal out the other end. And we've got a property through Bill Sheriff, who's pretty well respected in the industry, in Colorado. And we've got different formations in the geological structure throughout this big land package. So we'll be able to test it in more than one kind of sediment or geological condition. So probably said enough about that, but there's my stock tip. Remember, I own it. And this is going back to what I said a moment ago with Matt Watson on more and more demand for silver. It has leveled out, as Jeff said in his presentation, at about 100 million ounces a year. And I remember when it first came out in 2010, Jessica Cross from Metals Focus wrote an article. She went out 10 years, and her projection was, I think, 140 million ounces by 2020. And that probably would be low based on not having improvements in the efficiency of solar. But it's really quadrupled since I think she wrote that first projection in 2010. That's front page. I have a free service. Just go to themorganreport.com, first name and an email. I do videos and updates and give out free information. There is a paid service. If you're interested, you could go to the subscribe tab and read more. YouTube presence, barely, and I do get out and do some of my own Twitter. I do have a couple people that help me on that account. So I'm not sure where we are time-wise. Could someone tell me? 10 minutes? So I'll take questions. I know we're not set up for that, but my hearing hasn't gone too bad if you have any. I'll start off. Someone will have a question. The question I get the most often, comes like every week, is if the stock market goes down or crashes or sells off hard, what happens to gold and silver? They go down. What happens to the mining shares? They go down. So they're pretty highly correlated. So that's one I get all the time. We're writing this next month on where the miners are relative to true value. And the shares on the top tier are trading generally at a gold price of around $13.50 an ounce. And we're still in the $17.50 range, I think. So they are discounting quite a bit. So it's probably not a bad time. If we got a big crash in the stock market, they would probably go lower, but I don't think they'd stay there very long. You got to remember, gold is the most negatively correlated asset to the stock market. Jeff gave a presentation in San Francisco, I think 2 or 3 years ago. He did an analysis from 1968 to, I think, 2019 or so that showed that to a balanced portfolio, I think it was 25% gold holdings was the correct weighting. So, you know, I'm all the way up to 20%. So, you know, it shows you by, you know, his analytical work that it's an asset that you should have in a balanced portfolio. Yes?
I've got a question on the opposite end of that, what you said. How do you sell silver when it's $180, $90 an ounce?
How do you sell it?
Are going to buy it?
Well, there's wholesalers, there's market makers that will, but don't expect most of your retail people to be able to do it. I mean, a lot of these guys you hear on the internet that are putting out some interesting information, they don't have a bank account that can handle that kind of volume. So if everybody ran to the door to sell, they wouldn't be able to cover it. So where do you sell? You've got to be in tune with someone that can write that kind of a check, and that would be basically a major bank or a bullion bank or a wholesaler or somebody in, let's say, the real level of the industry, not on the retail level of the industry. Yes?
Your most recent video with Cliff Hahn, talked about, I don't want to quote you exactly, you said something about keeping cash and just kind of, you're not selling anything, you're not buying anything. What would be some of the things that you would see to do one or the other, but mainly when would you start maybe getting more aggressive in terms of buying? Am I quoting correctly from the video when you said you're just kind of staying?
Well, I think, so he's asking me about this video I did recently, and I was talking about a cash position. I was actually using Cliff, and I agreed that in the worst case scenario in a bank run, there's not enough physical cash. So I was just kind of not joking, but sort of half joking that, all the metals heads talk about if you can't touch it, you don't own it, right? So I went back and saw one of Jerome Smith's early writings that's pretty rare. I probably only have 1 or 10 copies, called The Reinstitution of Money. And in that book, he talks about the ownership theory of money. So I started thinking about it after I read it again. And I thought, well, let's apply that to the fiat system. So if you can't own the physical, dollars printed, you don't own it, right? And so what if that happened? What would it be? So I didn't know until I ran the numbers. So when I ran the numbers, it came out about 2% cover ratio. But 60% of the currency is overseas. So if you drop that in half, that'd be about 1%. And then if you think about it further, not all of the cash is in a bank. I'm guessing at least half of it is out at the liquor store, the grocery store, the movie theater, the restaurant, every place that does a cash business. They've got cash in their cash registers. Yeah, they take it to the bank, but it's it's a cycle, right? So what's actually in the bank. So my point being that that's the case, and that's just an academic thought experiment. But the reality was it's probably a good idea to have some cash on hand if you require it. And you don't have to require it from a solar flare or, ATMs closing down or a bank holiday or any of that stuff. I mean, I was in Lake Tahoe one time and they closed down, the telephone line stopped. I mean, I was like in my 20s or 30s at the most. And I had cash. So I walked up and bought my gas with cash and went on my ski trip. But everybody else was waiting for the credit card to connect to the phone line so they could pay for their gas, right? So there are times it comes in useful. As far as buying, I think you're asking me, you read it as if you're holding cash and get ready to invest it. Yeah, I am holding cash and building cash right now. I don't like the way the market's acting right now. And it's low, but I think it might go lower. I don't know. So, and also the stock market with what's happening in the geopolitical scene, it's getting more tense. So I'm just going to wait and see. I have an adage, when in doubt, stay out. I traded futures for a long enough time to get pretty damned good at it. And a lot of times the best investment you ever make is the one you don't make. It's the one you wait. So, yes? Opinion of how long we will actually have cash in the U.S. Tough one. This will stir up the pot. I don't know. It's obvious with what I've written and studied that the bankers probably want to go to a cashless system. I mean, in China right now, out of the, 1.2 billion, I don't know, is it 1.3 or 4, anyway, billion plus people, 400,000 of them are zero cash. Everything comes off their phone, everything. It's the cities, but they don't use cash. And I think that's the trend. I mean, like my kids never carry cash, So I would guess sooner than later, I'd be surprised 10 years you'd see any cash, but I don't really know. But it's the trend, that's for sure. Yes? Enviro leach, or it's now environmentals, is, everything. We were having trouble in the first circuit in the pilot plant because there's too much copper in this stuff. So we had to learn how to take the copper out before we put the PC, the ground material through the system. So we learned that, trial and error learning, and we figured that out. And now it takes out everything, rhodium, iridium, platinum, silver, gold, the whole thing, and it's really high efficiency. Like recovery rate for a miner, I don't know, ask Dr. Bennett, 90%, 92%. These are like really incredibly strong yields that you don't see in some of the mining industry because of nasties in it, or, you know, arsenic in it or whatever. So. Yes, sir. Ma'am, excuse me. If we go cashless, wouldn't that make silver an industrial commodity only and cease its function as money? I would say no. And the reason I say that is I think the next leg up in this move to all digital will be asset-backed cryptos. And as I said, I'm biased and involved with one called LODE that is a asset-backed gold and silver-backed cryptocurrency. I actually think that's what's going to take the next leg up. It's awareness, and there's not much awareness about the silver market. And once there's more awareness about the silver market, and it's easy to obtain, and there isn't a huge markup depending on the scale. So with digitized gold and silver, you can buy a gram and not be penalized like you would be if you bought like one coin from a coin dealer. He's going to charge as much to mail it to you as the coin costs, right? Close to it. I'm exaggerating, but you get my idea. Whereas on a digitized product, you're basically, you know, using some internet energy, and you're going to buy a gram or 10 grams or 1,000 ounces or 10,000 ounces, whatever. So I actually think the opposite, that as the new system becomes more and more pertinent and more demanded by the market, that we will see more of the asset-backed cryptos than the, I'll call fiat cryptos that aren't backed by anything. So that's what I see. Earl, just.
One of the charts that I never, and maybe you know the numbers, if I had taken, say, 50 grams 30 years ago, I put 25 of it in the S&P index, just let it rise, I put 25 in the silver, just let it rise, where would I be today on price?
Ken answered exactly, Earl, but he asked you what's the compounded annual rate of return of gold or silver versus the S&P. If you do it from 2000, the compounded annual rate of return on gold till present day is 10%. And that came out to about 600%. The S&P came out 331%. So the last 20 years, it beat the S&P. Silver didn't do as well as gold the last 2 decades. It compounded an annual growth rate of 9%. So it's done its job. I mean, I know I'm an apologist for the metals, but you know, they're really not about making you filthy rich, and everyone's waiting for the big explosion and, you know, the $100, $200, $800 silver or whatever. But, you know, go back to 2020. I mean, when Buffett bought in the late 90s, he was buying on an inflation-adjusted basis the lowest price silver's ever been. You know, it was worth less. It was the lowest in true value or true price at that time than when it was in the Great Depression. And of course, he loaded up about 129.7 million ounces of silver. So he's a value investor. But I think, and one last comment, I think my time's up, but you know, I think one of the problems that I've had over the years is not being able to communicate effectively that I think everyone should own precious metals. And any coin dealer will tell you that, but in the right amount. People get the idea about precious metals, the fiat system, the banking system, fractional reserve, all the stuff, and they run to the extreme end. And you don't need to be an extremist. You know, you should be balanced, you know, and I think that's the real message about precious metals investing. Have enough, but you don't need to put your whole life, you know, on the gold theme and the gold meme. So I'll leave it there. Thank you. Appreciate your
Awesome. Thank you so much.